Happy Monday out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Monday, January 31st, 2022. Starting with markets, we have stocks mixed this morning, commodities up, crypto down, dollar flat, global bond yields up. Big movers, we have the Russell 2000 off 1%, Bitcoin off 2%, nat gas up 6%. On the economic front, Friday's December personal consumption and expenditures data out of the U.S. economy confirmed that the U.S. economy is, in fact, losing steam under the hood, irrespective of Omicron. So from a headline basis, we saw headline PCE consumer spending tick down to 12%, or sorry, contract at a 12% annualized pace. That's the biggest contraction we've seen since February 2021. Services slowed to a 1% annualized pace of growth. That's the slowest rate we've seen since February of 21 as well. And then take it to the chart, the goods economy. The goods economy hangover is real. Take us borrowing a chart from our Around the Horn this weekend. We saw goods consumption, real goods, real consumer expenditures on goods contract at a 32% annualized pace in December, Christmas month. And so clearly there's something going on here as it relates to the goods economy, a hangover and the overconsumption of goods that may in fact continue to weigh on growth as we progress throughout 2022. And then lastly, we had real disposable personal income as well as real disposable personal income per capita contract at a 3% annualized pace. That's the slowest number or the biggest contraction we've seen since June of last year. Shifting gears a bit, China's January PMI data were confirming of our grid model's view of a mainland economy slowing to its nadir here in Q1. So the headline official manufacturing ticked down to 50.1. That's the lowest print we've seen since October. The non-manufacturing PMI official ticked down to 51.1. That's the lowest print we've seen since August. And then the Caixin manufacturing index PMI ticked down to 49.1. That's the biggest contraction or the lowest number we've seen since February of 2020. Now, mind you, that was the nadir of the China's COVID slowdown at that particular juncture as well. So, obviously, if you have forward-looking views, and we certainly have some of the best models in the world in terms of projecting the rate of change of Chinese economy, the global economy, the U.S. economy, you pick your economy. Our models are continuing to say that that bottom is here in Q1. From an overbought perspective, U.S. dollars overbought versus the Swiss franc, and the dollar is overbought versus the Mexican peso this morning. British pound is oversold versus the dollar. Looking at the S&P 500, that's still bearish, fams, minus 5.7% of downside versus 4.7% of upside. WTI still neutral, fams, minus 8% of downside versus 4% of upside. Bloomberg Dollar Index broke back out to bullish, fams this morning with 1.7% downside in its probable range versus only 0.1% upside. So don't chase that this morning. 10-year treasury yield neutral or bullish, fam, still minus 6 basis points of downside versus 21 basis points of upside. Bitcoin and Ethereum still bearish, fams. Bitcoin minus 15% of downside versus 9% of upside. Ethereum bearish, fam, still minus 22% of downside versus 14% of upside. And then gold neutral, fams, minus 0.4% of downside versus 3.8% of upside. So with that, Darius Dale presenting our macro minute for Monday, January 31st, 2022. 42 macro subscribers after I publish our leadoff morning note. I'm going to be offline until Wednesday. So just keep that in mind. I want everyone to be aware of that. So catch you back here on Wednesday on the Macro Minute program. Cheers.